Once again, ladies and gentlemen, boys and girls, and children of all ages, we are now tuned in to the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful mountains of Denver, Colorado. If you haven't done so already, please go ahead and hit that like, subscribe, comment, and share button. And if you know who Uncle James is. That's right, Uncle James. And we're here live on YouTube, we're on Instagram, and we are on Facebook. Thank y'all for hitting those love buttons up there on the Instagram. But if you haven't done so already, if y'all check me out on Facebook and YouTube, if you haven't done this already, it's a shame on you. Hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Gentlemen, without further ado, let me bring in today's guest. Let's give him a loud drum roll. I do got my drum roll. I am using my mixer as well. That's not my drum roll.
What up? What?
Oh, that's not it. There we go. Just give a loud round of applause. Uncle James is in the building, y'all. What do y'all got out there? And he's out there in the city of brotherly love. Uncle James, what's going on tonight?
How are you tonight?
I'm doing pretty good.
I hear
you. That's my guy Brian right there. Says, I see Prince and Uncle James. I click immediately. There we go. If you know, we ain't here tonight. Uncle James, he out there, y'all. He's in suspicious. He's in a place unknown on the Eastern Seaboard, right? So,
International Man of Mystery.
The Man of Mystery. Okay. And okay, that's Brian on there on YouTube. He said he see it. We got Mark Wingo. What's going on, Mark? Give Mark a line. Mark Wingo over there on Facebook. What's going on, Mark? Glad to see you. So tonight we're unrestricted, right? We don't have to be on a show with producers where you have to, hey, say this and do this, all of the good stuff like that. But today, y'all, we're doing the market 2023. We've had a long year. We started the year off hot. Then we went cold. Now we start to warm back up in the wintertime. And here's a great thing. Now we're warming back up in the wintertime. Now the market right now, S&P 500 for 2023 is up 19%, 19%. I didn't get the chance to see what happened today. But at the beginning of the day, it was at 19% going on 20%. So, yes, that's what we got going on there. We have, I think the hottest sector right now is what's the hottest sector right now that I saw? Oh my God, I got my clipboard on my desk. It'll come to me what the hottest sector was, but we're talking about the market. You know, Uncle James, you've been hot on oil, right? Who is this?
I'd say AI is probably your hot sector right now.
Yeah. I was looking at somebody wants to join here on Instagram too. So y'all, you forgive me. We're doing a whole bunch. I'm trying to get on. I don't know. I'm trying to. Maybe I shouldn't. Well, I'm on Instagram too. But all right. Well, I can't see somebody's trying to get in. Wants to request to come in on Instagram, but I can't get you over there on Instagram. But anyway, let's get into this market review. Uncle James, how do you feel about 2023?
2023 was an interesting year.
One thing, Uncle James, before you get into anybody that's catching this live. Comment, tell me where you're from. Tell me where you are from on Instagram, Facebook, and YouTube. So, yeah, how do you feel about 2023? You know, pretty rocky year.
Yeah, it you know, like you said, it started off good. We're now in the seasonally favorable time of the year, as they say. We'll probably stay in that until just about April. The market is rebounding a lot. I think we've had a situation where we've continually, the pundits and talking heads have continually repeated over and over again that tomorrow the big recession starts, and it's tomorrow. It keeps. This is the most over broadcast recession I think I can ever remember.
It's the most scheduled recession. That's why I didn't listen to it. Right? It's the most. This year, everybody talked about the recession. And I made a post earlier on my YouTube and my Instagram, and I spoke about that. You saw a lot of people run to cash because cash was turning back 4%, 5%. Interest rates went up. Everybody went and got those CDs and money markets. I mean, that was the good ones. But other people just put their money in the cash, tried to find something else or whatever. But the people who weathered the storm of that downside and to come back to the upside, it paid off. So Mark here, he says he's from Atlanta. So we got Atlanta, Georgia in the building. Shout out to Atlanta, Georgia. So yes, for the people who really followed the market, they paid off with that if they was able to withstand for 2023 at least. So now
Yeah.
I gotta ask you, James, you was big on BPT and oil. What do you got to say about oil?
It's been a mess. Early, there's a couple of crazy things going on. For one, the U.S. has become this enormous exporter of oil. And in fact, Texas itself is a larger oil producer than Kuwait, believe it or not. And I'd say that given what's going on in the world with Russia, the war in the Ukraine, issues, China's having a big economic slowdown. Many of side countries like Venezuela and Iran are trying to sell oil like cheaper on the side to just bring in more cash. And it's kind of the oil market has been kind of topsy-turvy. Long run, I'm still pretty bullish. I'm a little concerned over the way stuff is trading now, because what I'm not liking is that OPEC continues to say they're cutting oil production, yet oil prices are actually going down when they say that. And I don't know if that's suggesting that we're going into a recession, if that's how people are taking that, or that's suggesting that they're not really cutting production, they're pumping anyway, and nobody really believes what they're saying. Or perhaps maybe it's just not relevant anymore because there's all these side producers now that are going to pick up the slack no matter what happens. They may just not wield the power they used to. I would say if there's one thing you've learned in the last 2 years is that the energy crisis from the 70s was pretty much government manufactured. I would say it was there's no reason for us to ever have had that energy crisis. It was a fictitious a political event, and for whatever reason, that political event has come to an end. So we seem to be knee deep in oil everywhere. So BPT and other energy producers. I mean, you see it as well with the alternative energy. A lot of them are getting creamed. I mean, a lot of the windmill, the wind farm people pulled the plug on a bunch of wind farms in New Jersey. There's a lot of the alternative energy is having a tough time. It looks like right now the only oil producers that are really making money are the big oil companies, the Exxon Mobils, those kind of companies seem to be the integrated oils, as we used to call them, seem to be doing quite well, but everybody else is really struggling. And the whole energy field is struggling because if you look at EVs or electric vehicles, things like that, I mean, most part, it's a nice fantasy for television. It makes good news copy, but they're really not selling that well. And for most regular Joe six-pack Americans, they're just way too expensive and they're just not practical. So there's, we have that's another issue that's going on.
Now, let me ask you this question: how you feel about oil? Would you put oil as something you will hold, something you will buy, or is it time to sell?
Well, right now, I mean, it's gotten really cheap again. So if you're a long-term player, I would say if you think in the long run, the U.S. economy is going to boom, global economy is going to follow it on the way up. We talked about this before that I think that Japan is making a big comeback. Other countries, I think there's some other countries out there. Korea is one of my favorites.
Korea
that have really strong.
I don't know, James. North or south? North or South Korea?
South, of course.
I had to check that. I was like, hey,
I don't know. North.
Now let me ask you this question, right? Now, as we go into, let me get some of these comments. We got some people's comment is coming in, right? So y'all drop your comments. I know I don't know how this looked on Instagram because it kind of like watching me listen to you, but hey, we're gonna get into it. We're gonna make it happen. So we got B Grizz. What's going on, B? Jesus name? What his name is? He said, James and Prince, how do you feel about investing more in token /coins next year and going forward? Banks have invested billions and blockchain. I told you this conversation is going to come up. You can't talk about it. You're having a resurgence
Yes.
of Bitcoin. So everybody's crawling out the window. Everybody's coming out of the basement and they're like, hey, what's going on with that cryptocurrency? How do you feel about Bitcoin crossing over 40-some thousand?
Initials for you. ETF. You're going to get a legit ETF, probably from BlackRock. I think the SEC is moving to, I'm going to overuse this word a lot tonight, normalize crypto. It's going to become a
Normalizing crypto.
legitimate go-to. I think the days of the Wild West are over with. It's going to be a little more regulated like the stock market. Maybe not quite as much, but probably close. That's going to bring in really big money. And it's going to be a stampede into a lot of these things, kind of like elephants running around the bathtub. So I would say it's a lot of this is going up. It's a function of a new access by institutional investors can really get in there and buy now like crazy. Where and you know they're starting to get their feet wet because up till now they're except for very high risk individuals and very high risk institutions. Most regular institutions, the crypto market was just too much of an unknown. There were too many. It was too much of a Wild West kind of market, and it made it too difficult to really understand what was going on and why things were happening, and sort of figuring out the real from the unreal. And I think I think we're on to. I think we finally starting to make a breakthrough in digital investing. Let's just say as a total. That we're going to start to see this like a regular part of investing, like people buy stocks, people buy bonds, people buy gold. People are going to be
It's
able to
going to become
buy
its own
crypto.
sector slash commodity. What you're telling me.
Yeah,
So
like,
now,
it's going to be able
this is this. I get you 110%. You're saying, hey, Bitcoin and crypto is becoming a more sturdy investment to where institutions can invest. You're getting, I saw BlackRock, they put in the ETF and all those other things. You're kind of cracking out, Uncle James. Kind of cracking out. Can you hear me?
Sorry. BlackRock is going to come out with a very large ETF. And that's going to, I really think that's going to put a stamp of approval on digital assets.
So now so you would put it as a buy, sell, a hold?
I think I would look to buy right now if it's your thing. I'd still be really careful, but I would look to buy. I would not get carried away because a lot of this is just because institutional money that was sitting on the side that couldn't get involved in digital assets is now starting to feel freer to get involved because there's legitimacy. The regulatory framework is starting to be created that they know what they're really getting themselves into. But I think if you're thinking Bitcoin is going up because the world's coming to an end and the dollar is going to collapse and the U.S. government is going to go by the wayside, I think that's probably not really happening. That's not the reason it's going up.
Now I got to ask you this question. It sounds like you're saying, hey, it's probably going to go up because more people are going to have access to it. Institutions can get inside of it, and that's going to increase the volume and access. That's something I agree with. I can see that. But do you see any value there? Because we know just because it's volume and price goes up, price action doesn't mean there's any value. Do you see any value in the crypto digital world?
It's hard because I've been so disappointed in this space over many years. I was super skeptical, as you remember. I called it Bitcoin for a long time. And then I think the technology is really interesting, but the problem I have with it is the same issues. Like when you talk to people in the space, they're like, "Oh, it could do this, and it's going to do that, and it's going to do." They said the same thing in 2016. They said the same thing in 20. They said the same thing in 2018. I'm waiting for it to happen. It's still really not happening. Meanwhile, you see things like AI. AI has has broke. It's had its 1994 moment. It had its Netscape moment. And I think it's only gonna race along that much faster now.
Okay, I get what you're
Bitcoin,
saying. So you're saying AI is proving its value and it's showing you because it's saying that
yeah,
hey, now you got AI photography, you got AI chat GPT, you got AI to do AI is showing its value to the marketplace, but you're
yes.
saying Bitcoin is really not showing its value because it's like who's
Digital,
really using it?
it does some cool stuff, but it's still a space that's inhabited by a lot of engineers who are busy patting themselves on the back, talking about how smart they are. And
Hmm.
it's not like, we're not we're yeah, maybe we're transferring money using blockchain technology, but for most people, like when you do a bank transfer, that's not something they're going to like go, woohoo, I did like blockchain technology. For most regular joes, it's like they're not going to notice really much of a difference.
Okay.
The
Oh wait, one second here. Got a donation. Oh, we got Hal. What's going on, Al? Donated $9.99. He said Uncle James in the house. Okay, all right. Okay. Nice. But let me he had another hold on. We got another question that came in here. He also added BG Grizzlier. I can't even say his name. I always mess it up, but he's a cool guy, tunes into the show. Any particular industry you guys are looking to invest in? Uber's now on my list for next year. So any particular industries, I'd look at those 11, markets, any particular industry or sectors you think it, maybe the thing.
I'm AI first and foremost, period. And and I would say semiconductors probably next. I throw in always because I put this in every year. I do think someday it's going to happen where 3D printing is going to become a big thing.
James, you've been on 3D printing for God knows how long.
I've been harping on that since probably 1994. It's still not happening, but I'm still holding
So,
before I die. I may not. You may have to carry the ball for me with that one. And then the other thing that's really interesting, that's having a lot of fits and starts and a lot of trouble right now. So it's a super high risk investment. Um, are these miniature nuclear power plants? I think they're called
mm,
SMRs. I think that is the hottest technology thing going on right now. I mean, if you're worried about carbon, they're carbon neutral. If you're worried about large nuclear plants that are too expensive to build, these are kind of unitized, so you can put them together and add more generators or detract
mm,
more generators. They're kind of like plug and play. You kind of get one, you plug it in, and boom, you're in business like really quickly. And I just think that's a fascinating technology. There's a few little companies that are doing it. Of course, Westinghouse is involved with that. However, they're part of a much larger corporation, so it's a little hard to play the stock directly. But I think you could get some real legs up. There's been some fits and starts lately. They've gotten kind of cream because a couple of projects got canceled. Uh,
hmm
or backed out of. But I do think I see it every day. There's all kinds of stuff going on talking about where I live. A local hospital, even in North Jersey, is actually talking about using it to power the hospital. So
mm.
they're
Okay,
actually
I didn't know about that. Are they? What is the way to invest into that? You said these portable nuclear power plants.
like it's SMR, but it's really a fly by night kind of a. I don't want to say fly
Okay.
by night, but it
SMR.
has a lot of detractors. It recently got creamed. It was hovering around $7, $7.5 for a long time. It tanked all the way down to about $2. Uh,
Wow.
I did buy some in the sevens, but I did buy a whole bunch at $1.99. So I went back in and bought more. I think it's 280, 290 the last time I checked on it. Um, so because I'm one of these, in some ways I'm always looking for massive leverage. I look to take say $1,000 or $5,000. I want to turn that into 50 or 100,000. I'm not looking for anything smaller than that. I'm looking for really big return.
Mm.
And
Okay.
it 10 years. That's why when I talk about oil, I'm like, you know what? It's like a good time to buy. I don't know if you're going to make
Hmm.
it, but it's a good time to buy and stockpile it because
Okay. Now
it
that he said he's Uber's on his list, how do you feel about Uber now? How do you feel about my Uber now?
you love Uber, but I think it's a great company. Don't I use it all the time? Don't get me wrong. It's become like I use it as my chauffeur service. It's like it's awesome. And in fact, the other day I've brought some weird stuff. Like I had to bring a cat. I had to bring my cat down to Philly because I sold my house in New Jersey. And
Hmm.
parked my cat down here. So I had to Uber to Amtrak because Amtrak was the only one who would take my cat. And believe it or not, they charged me more for the cat than I paid for my seat. I got a discount, but the discount did not apply to animals. I couldn't believe it. The lady was like laughing. She goes, "The cat's going to pay more than you are." "Cat had a ticket." Then she goes, "Well, at least the cat has a seat." I was like,
Mm.
"That's great." I'm sure the cat's going to appreciate that. But I think Uber is really interesting. The only issue I have with Uber is long run. There's a couple of issues. They've had a lot of regulatory issues with
Yeah.
this. Do people really work for them or are they
Hmm.
freelance and that kind of stuff? And that periodically rises up. I think, frankly, it's very hard for drivers who say work full time for Uber to really make a living. Um,
Hmm.
Drivers who work just like the peak gravy times, they can make some nice, it's a nice extra gig, but it's not a full time job. That's one. Two, Uber is definitely a target where AI could totally wipe it out. So that's
AI?
oh,
Explain it.
totally. Because right, we get an AI little machine in our car. Like you have a GPS now. Next to your GPS, you have AI. And what do? You say, "I'm going to drive all the way down to Georgia because I want to visit Prince's father and tell him what a great job he did with his son." And so I'm going to drive down there. But you know what? It's a lot of money, gas, and tolls. So I'm going to plug into my AI and I'm going to say, "Hey, I'm looking to pick somebody up. If somebody's going south, I'll drive you. Just split the gas and tolls and maybe lunch or buy me lunch or something, and I'll drive down." And the AI can pair you up. Like AI could pair you up just the way Uber pairs you up.
But I mean, but you got to have the platform, right?
Well, but look how easy it is to do it with AI now. AI.
Mm.
That's when I like the chairman of
It
Uber.
has to like Uber's value is in the data. Like it got this data of people who ordering food and catching rides.
Do
That's
but right,
that's
but
just the
this is another
platform.
issue. Do you like sharing your data with everybody? I don't mind sharing it with you because we have a friendship and a business relationship and a whatever a fun relationship. Um, but I don't know if I want Google to know what color underwear I wear every night. I'm not really comfortable.
Mm,
I'm still not comfortable with that. And frankly, if they're going to know that, I think they should pay me for it.
that's
And
true.
this is the
I
thing.
do. You know what? I now I agree with that. Now I don't mind Google knowing my underwear that I'm wearing because now it may say, "Hey, Prince likes to wear silk underwear, so we're going to start marketing silk underwear because Google has told us this is what he likes to order." And I might get a bunch of silk underwear advertised to me that I might really like.
That's
So
where
I'm
these
like, hey, but I
came from.
do agree that some of that data that people are collecting through a Facebook, YouTube, everybody out there is collecting data. Even when you email somebody, they got your email address and they're pairing it up. And next thing you know, you're on a distro getting all type of stuff that you didn't even sign up for. So I do agree with that. You got a point. You made two very valid points. A great threat to Uber being AI, where AI could come in and like pair people up. Still do need a platform, or it has to be some type of platform where I go to and it just says, "Hey, Prince."
Sign
uh
up. Signed up for Facebook, and you could sign up for AI Uber, and you sign up, you whatever, maybe you got to
mm,
show your driver's license and that you got insurance on your car, and you just whatever, you put a picture of yourself in your car, and then you anytime you want to just plug in because you need to make some extra bucks for because Christmas is coming and you need to get more gifts and things like that. You could pick it up as a side hustle. There's a lot of but you're harping on that data thing. I think is another big issue. I think the days of Google, Uber, all these big tech companies and little tech companies kind of freely collecting your data and making money off it will kind of without your permission or kind of coming to an end.
I mean,
I think
more
that
of
I think those days are numbered. And I think I don't know what that means, but I think it's going to start to come to an end.
okay. Now, you made a very valid point, something that I am definitely sleeping on, that I slept on, was this very valid point of Uber, right? That AI. I already kind of knew about the W-2s or W-9. Are you W-2 or W-9? Are you going to be an employee or independent contractor, things like that? I got that one. That one, I'm like, hey, that I think the W-9 conversation will win because a couple states have brought it up. California tried to beat it down, and somebody else tried to beat it down, but it slowly kind of makes its way, right? Um, the other conversation I was worried about, someone big coming into the industry, like Tesla coming in and buying Lyft, Tesla coming in and buying DoorDash or Grubhub and putting it on autonomous vehicles, right? I think whoever does autonomous vehicles would be a great mesh for Uber, right? Or I thought about
But
cross
that's
inside of the two people inside the industry, like DoorDash and Grubhub getting together. But I did not think about how AI could just get in there and just disrupt Uber completely. But Uber could make it his
yes.
friend.
And
If AI put in Uber and said,
yep.
hey, just, you know,
Might what's happened recently when the internet first started, there was this great sort of and blockchain was all about that at the beginning. There was this, decentralization of everything. The internet created. Now the internet got re-centralized, and I think some of the
mm,
centralized players are going to try really hard to make sure that AI stays centralized as opposed to decentralized. And I think they're gonna they're
and
gonna do their best to
okay. Okay. That's a
you
very,
know.
very,
And
very
so that's
mhm.
go ahead.
Oh yeah, I was saying I want to get into the next one. He asked the question, should we be investing in debt servicing companies? Because I'm thinking that they're looking at, hey, household debt is swelling up so much. On top of that, interest rates on debt is pretty attractive, right? And that's what people are kind of looking at, like, hey, should we be, maybe debt servicing could be a thing, So how do you feel about that?
Say that the road to hell is paved with easy credit. And every catastrophe that I could almost think of in my lifetime, whether it was the sovereign debt crisis, the junk bond collapse, the 2008 financial crisis, always seemed to revolve around overextension of debt. Debt has a
Mm,
tendency to, particularly if you're in debt, you know this. I'm not telling you anything you don't know, but debt has a tendency to kind of take over, and
mm,
it's very hard to manage to get over your head. And I'm not sure. I would look, actually, with higher rates. I would look at like tax-free bonds, maybe. I'm not sure what the yields are. I haven't been looking at them in a long time, but I would think you might be able
so
to pick
muni
up some
bonds, you say you
tax-free if you have a big,
okay,
yeah,
so you
like
see
muni bonds,
muni
right?
bonds.
If you have, and you if you live in a high tax state, Illinois, New York, New Jersey, and you buy those. I don't know what the Port Authority bonds are paying or the Turnpike bonds, but there's a lot of really solid things out there that you could get your hands on. And if the rates are higher and you get that nice tax-free yield, this might be an opportunity. Um, However, I think when we want to get into talking about inflation and interest rates before we start pitching
Mhm.
debt one way or the other, because I have a real different opinion on interest rates than most other people have.
Okay, we're gonna get into that next. Mark here says, I agree, recession talks, but still keep an optimistic outlook on the economy. He said, everybody talk about this recession, but everybody's talking about how great. Oh, look at the jobs market is doing this, and all the market is doing this. So that's a pretty good observation. Facebook there, I can't even say his name. Suleiman Dalio says, greetings, 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 wherever you may be, right? And right here, Mark says again, great point about Bitcoin and AI. you can definitely see the value that AI brings. I think the messaging and the uncertainty of Bitcoin has scared a lot of people away from consuming and investing in it. So yeah. Now we got Willie here says, thanks for the great information. What's going on, Willie? Tuning in. Sean
All right.
Uncensored says, let's go. What's going on, Sean? Get a nice round of applause too. So you said you want to, you said, hey Prince, I want to make sure before I take it there. So hold on, wait, make sure I got that. So if we want to go there, hey, we're totally uncensored in, well, kind of, sort of. Let's see here. So I want to put this up as we talk about this topic. Let's go there. Let's talk about, how do you feel about interest rates?
All right. Well, they're like the mainstream media is missing the whole point of this entire interest rate increase. The Federal Reserve is not raising interest rates per se in a long-term perspective. They are normalizing interest rates. In other words, they're putting interest rates back up to where they should be. They're not really raising them that much. Historically, if you go back 100 years, the Fed rate is like 4.49%. So a zero interest rate policy is dangerous for one, and it's
Why is it
unrealistic.
dangerous? I want you to walk through it slow. Why is it dangerous to have a zero interest rate?
Just think of your credit rating, right? If you have better credit, why do you want better credit? Because I get a better deal when I make a loan, right? If you have zero interest rates, what does that mean? That means there's no risk in the system, like at all? Really? No risk? You're going to give me, I'm going to go to the bank and they're just going to give me $20 million and they think I'm going to pay it back? I'm not going to pay it back. I'm going to run away. Sorry, I'm just kidding. Right? Like there's, you know what? It's like there's always risk and there's always levels of risk. But when you have no interest, like a zero interest rate policy, you've eliminated interest rates of kind of telling you how much risk there is. That's why if you're high risk, you borrow money at 20%, and if you're low risk, you borrow money at 2%. And that's why you want to be low risk. You want to have a good credit rating because it's, historically rates have been around where they are now. During the 90s, when the market was booming, interest rates were much higher than they are now. The problem is we were so low. So if you had that mortgage that's like 2% or 1%, I don't think you're going to see those again in your lifetime. So you may, in fact, I just read an article yesterday in a journal, or maybe it was this morning, that people who are getting divorced are not selling their house. They're living in the house together because they have a good deal on the mortgage. They just decided to stay. There's no way to replace that asset. Because if they sell the house, they're going to borrow money at 8 or 9%, or say 7.2%. I think I just read this morning, and they're going to sell a house that their mortgage is like 2%. And I mean, I kind of ran into the same issue with my mother passed away, and we had to sell her house, and she had a mortgage that was just really low. And the bank's like, well, if you want to take over the house, but you got to get a new mortgage. And I'm like, well, what's that going to be? Well, it's going to be like 8% because you're a bum and we don't trust you. And it's like I'm like 8%. That means it's going to be this. They're like, yeah, I'll tell you where to send a check. I'm like, no, thanks. I pass on that. No, it's like, it was like crazy. It was like 3 times what my mother was, maybe 4 times what she was paying.
Now, James, I got to ask you this. So you're right. The federal fund rate is usually at 4.6. Long term, it's been at 4.6. We're at 5.33, right? I know everybody's talking about cut. It's like, well,
That's
we're only
not a crazy thing. Well, you got to go. You learn and a lot of these people should know better. They were alive in the 70s too. They should remember all this. You got to raise rates way higher than they need to be. So that way, when you start to cut, it gives this huge kick to the economy because the cuts are significant. You're right now, what are you going to do? You're going to cut rates back to 5%? Like, it's like nothing. It's not going to do anything. I think again because they have a because they have this fantasy that we're going to go back to this zero interest rate thing, that somehow this is legit. It is not legit. You're never going to see this again. You're like if you're sitting around with your money waiting for it to happen, it's not going to happen. Not at least in your lifetime. Well, maybe you live to be 100, you might. Yeah.
No, I'm not Charlie Munger. That's a RIP to Charlie Munger, who passed away too. But so you're saying that 2% days are not coming back?
We're 5.4. We're probably we rates should be as high as 7, and then they should be cut back from 7. But we got a while. Inflation has slowed. I think the Fed's done an excellent job considering it got such a slow start, because they started believing their own press releases. They believe that phony inflation is transitory. There's no such thing as transitory inflation. That is a made up, that is called fake news. That is a made up thing. There's no such thing as transitory inflation. You either have you have inflation, to what degree you have it. And the problem is they were so slow to start, they have creamed people. Because I noticed, and I think this feeds into this recession talk. A lot of people are up that 19%. But in reality, if you adjust for today's dollars, your buying power is down about 33% in the last 2 years or 3 years. So because of this inflation run it was like blow off.
And Jay, I want to say this. I saw it very popular.
Money
yeah, I was seeing that people was finding out. They were saying, man, I'm making $100,000, but it doesn't feel like $100,000. So they're like, man, I don't know. I thought 6 figures was going to be such a great thing. They're not realizing that invisible tax called inflation.
Yes. And then on top of that, you're paying taxes like that money is the same as it was 3 years ago. So actually, in reality, the taxes have grown in size. Like it's very debilitating what's been going on for a lot of people right now. You got to be really smart, and you got to not give in to all this kind of silly stupidity that you hear all the time. You got to say, hey, we need to save our money. We're not going to borrow ourselves rich. We need to make more money. We need a side job. Maybe we drive for Uber on the weekends, whatever. We'll pick a hot time, like Friday morning, everybody goes to the airport. That's the run I want, because those people are going on vacation. They're going to be big tippers. That's what I'm looking for. And
that's a very valid point.
You got to be smart. You got to think and say, what would I do if I was going to spend? Would I buy that? No. If and you got to be cautious. And one of the things I find is, if you have a little money now, I've noticed you can get really good deals, because people think there's a recession coming tomorrow. And why did they think that? Now this is part B of this inflation thing. They think that because the media concentrates only on their favorites. And those are the companies that tell the media what they want to hear. Those are the Disneys. Those are the Netflix. Those are all those, the politically correct.
Oh, wait, James, don't get me canceled.
No, we don't want to get you canceled. But Bob Iger said wokeness is over. It's over. And he said Disney has failed because you got too preachy. Let's not use the word woke. Let's stay away from politics. Let's just say too preachy. They got too preachy. They weren't making good movies. And you know what? They're terrible. That's why nobody watches that stuff, because it stinks. And that's one of the problems with Netflix. The amount of shows they have, most of them are horrible, because they're all this preachy nonsense that nobody wants to watch. And what's happening is that has come to an end. Disney was a big signal, but a more important signal was, and I forget his name, the new chairman of Morgan Stanley, because you could find a more politically incorrect person to put as a chairman of a major American corporation, a major high-profile American corporation, than this guy. This guy
is that Jamie Dimon you talking about?
No, I'm talking about Morgan Stanley, not JP.
Oh, no, not. Yeah, you're right.
I think
Morgan
it's
Stanley.
Pike or something like that is his name. Now, for some reason, I forget it, and I was trying to remember it before the show. This is the funny story. You want to hear a funny story? The guy curses so much that, as a joke, it was kind of like a funny thing. Compliance at Morgan Stanley investigated him for too many curse words in his email. Now, you have to work on Wall Street really to see the humor in that, because compliance that would be
Yeah.
legit. Like, that's really believable. That's not. I know people think everybody on Wall Street is running wild and they're all like whatever, like all those movies, like the movie Wall Street and all that kind of stuff. But the reality is far different. You can't even send out an email without somebody looking at it and telling you, you got too many commas in that email. We don't like too many commas. It's a
Yeah,
violation.
and I wanted to get to that because I was saying, like you made another very valid point about inflation, because everybody's like, hey, the rates have peaked. Next year they're going to start coming back down. So you made a very good point. You're like, okay, we're at 5.3. Historically, we've been at 4.2. We spent a decade or two, which created the longest running bull market, I believe, of low interest rates of 0, 1, 2. We live in. So you got to think about it. We have become so spoiled. Like, I purchased my home at a 2%, right? 2.7, right? And I didn't jump up and down when I got a 2.7. I didn't say, man, I got a 2. Yeah. Because I was refinancing to get a 1 when the interest rates went back up, right? But when I talked to my dad, and my dad tells me, son, I paid double digits when I got our house built. He said race was like, I paid like 11%.
I
to
just
see him.
people
He
who
sees
just bought
twos
my
like
place,
crazy.
they don't. I think they got it's like 8% or something they're paying.
Yeah, now they're kind of, people are getting up to, now, but now that we have been so babied, and we've
Right.
seen the
But
twos.
also think about this: if you're at 5.3 or whatever it is, and you're going to cut to 4.6, I'll give you that. So we're going to cut down to 4.6. What is that going to do? It's not going to do anything, because most people are paying like 30% on their credit cards. That's why you shouldn't have them, because credit cards are not. That's why it's not impacting the consumer at all. All these talking heads are blabbering away about it's going to impact the consumer. No, it isn't, because they're already paying hugely high prices. All those lease cars that you see everywhere, that is one of the biggest ripoffs in the. That is like it's a total. Those things are a total ripoff. And you're way overpaying for everything, and so people are already so overpaying. If things go up a little bit, it doesn't make any difference. If you're paying 30% interest on your credit card and it goes up to 32%? What difference does it make? It's not impactful anymore. If you were paying 5% and it went up to 20%, that would make it. That's impactful. That would make it. But
Yeah.
So that's another issue, and it shows just how far they're so out of touch on TV. Every time I watch like a lot of these talking heads, I think to myself, do these guys ever go grocery shopping? Like, it's like, you've got to be kidding me.
Okay, you made a good point, because we become so used to twos, we don't know how to act with a 3. We're looking at you like, come on, really, a 3? I can't do a 3, right?
Yep.
So, or people are like, it's kind of hard to go out there and buy 8. When for the last 20 years, people have been getting 2, 3, 4%. But I get what you're saying. You're like, hey, we live in a low interest rate society so long. By the time we come back to average, everybody freaks out and say, look at these interest rates.
Artificially depressed the rate, because that's Janet Yellen is a big fan of that printing money like crazy. That's her thing.
Mm-hmm.
And QE and QE2 and helicopter finance and all those crazy names they gave to all that stuff. And that has a lot of negative, in the long run, that has a lot of really negative repercussions. And this is one right now. So now you have a generation where, for a lot of people, renting is way cheaper than home buying. I think I saw a thing on, I think it was out of the Wall Street Journal again, or it might have been Bloomberg, that they said like it's 52% more expensive now to buy a home as opposed to renting a home of equal value. Like, it's that much more expensive, which is like the highest, the difference, the gap is the biggest it's ever been.
And that's how it usually happens. Like as interest rates go up, mortgages go up, so that disparity between the two just kind of increases because it's
Yep.
like, hey, when interest rates are going up and the house price is going up at the same time, mortgages are becoming more and more expensive to where people are opting to rent. So it's kind of opened up their renters market to where it's like, hey, it used to be very narrow. Like, hey, a mortgage is $3,000 and to rent is 2,500. Now it's like, hey, to buy a house is 5,000, to rent is 2,500.
Right.
So that's where that disparity. I get what you're saying with that. Like, how is that kind of going on, right? So anything else you want to say about? You made a another very valid point on those interest rates of like, hey, what do you want to do with these interest? These interest rates, inflation. But yeah, and I did a review of I never in the history of Federal Reserve banks, right? Every time they come speak, now everybody's hinging on every word, and the biggest thing is the interest rates, right? So when you look at the Federal Reserve Bank, he said, "Hey, I think those when we went from I don't know, like practically 0 or 1 or 2, and we're now at 5." He was saying, "I think we haven't even seen it's a lagging indicator. Like we haven't even because when we bump it, it takes a while for it to take effect." So he was saying he thinks it's going to have a lagging effect on the economy. That's why they're keeping them steady because they don't want to overdo it. So there's like, hey, let's continue to watch the numbers because we don't even think we've seen all of the effects of a 5.3 yet.
Hey, but it also, like you're saying, it's going to impact maybe housing. It will over impact housing, but people who buy cars are already paying way crazier higher rates than that, and they have been
Mm-hmm.
zero. People who have credit cards were paying way crazier rates than that when they
It's
were
true.
like interest rates were zero. They're paying 20%. So it's like it's not going to have the impact that a lot of people think. That's one of the reasons I feel like the economy is trucking along. Like I really think we're getting this Goldilocks thing where it's not too hot and not too slow, and some sectors are getting creamed periodically. Um, Places that were overblown, like a lot of the tech sector, that's where you're seeing a lot of the layoffs. Um, because they were hiring for like 10 years nonstop, like crazy. And
Mm.
now you're switching, and they'll probably really be impacted by AI more than anything. And so you're seeing that, and I just think as long as you're generating jobs, I mean, a bad job number is 100,000. What was it, 100,000 or something like that? That's like a bad number. That's not a recession. Recession numbers should be negative. There should be no job creation, and they're still trucking along, and that's going like swimming upstream where you have all these big tech giants like who was it like Spotify is laying people off. There was a
Yeah.
bunch of other announcements a couple of days ago. There's like big, you're talking 17% of your workforce. Those are huge amounts of people to cut. I mean, I think Twitter cut their workforce by like 70% or something. It's like a huge amount of cut they did over the last couple of years. And
Yeah, and right when Elon Musk brought it, then they started cutting, making all type of changes with it that you start to see all over the place.
yep. And the media again hates Twitter now because it's not one sided like everything else. Like you might be able to say something stupid, but so can everybody else. But like like Facebook, you were worried about getting kicked off or whatever. If you say the wrong thing, you get kicked. Well, Twitter, you can it
Yeah.
doesn't make it right, but it like at least now both sides can both say stupid stuff and still be on there.
Okay.
And I think it's gotten a lot of criticism, which I for one thing, I've used it since the beginning, and it's way better now than ever. About the only issue I have is their customer service is atrocious when you have like an issue. Like I had a security issue where they hacked one of my accounts, and they were just like,
Mm-hmm.
they're like, "Well, open another one. Sorry."
Mm.
Like that was their answer. Open another one. Sorry.
Okay. So now I gotta ask you this question here. This was big talks. It kind of disappeared, but I had to bring it up. The last time everybody talked, I gotta give you a little gem here. Jim, everybody talked about this, the dollar collapse. Man, we had BRICS talk. British, Russia, India, China, and Saudi Arabia was going to get together, collapse the dollar, and everybody was like, the dollar is overinflated, and people are sick of this mess, and it's worth nothing, and it's a fiat currency, and the Federal Reserve is printing all this stuff. How do you feel about the dollar collapse? It's giving us
Well,
that
if you
corona.
notice what happened yesterday, you know what happened yesterday? That was big news that nobody's reporting almost at all. And of all places, Bloomberg reported it. And I'll get to a minute why I'm so surprised that Bloomberg reported it. China's debt was downgraded.
Ooh,
So like you're gonna get rid of the dollar, which is all right. I would say I have a lot of issues with what's going on in the United States in the last 20 years, to say the least. However, you're going to swap that out because you're going to buy a failing dictatorship in Asia, a Russia that has no economy whatsoever, but a bunch of some natural resources. Uh, India's like India. I have a little more hope, but I wouldn't buy the idea that they're just looking to somehow they have an ulterior motive to be involved with that. They're not interested in getting rid of the dollar. They're just somehow they're seeing some way they can do trade or make money or do something. They're being smart. They're just looking out for themselves. Some of the other countries that were involved, some of the
say
oil,
that
I
again.
think
Why is
Saudi
that such a
Arabia
big
last
deal?
time.
That why? I didn't mean to cut you off there. Why is it such a big deal
Go
that China's debt was downgraded?
You're going to replace the dollar, which you're saying the United States has all these issues, but like you're going to replace it with a currency of countries that have far weaker economies, that have more financial and economic issues than we have. I mean, China's in big trouble because they killed the golden goose big time,
How did
and
they
they
kill
are
the
in
golden
big
goose?
trouble.
What's the golden goose for China?
Well, the golden goose was they kissed up to the United States. And the U.S. manufactured everything over there, created tons of jobs in China, and the trade-off was we got all this really cheap stuff from China. They kind of pissed. They became more of a dictatorship. They clamped down all the things that had the new openness created a kind of a greater an economy that was pumping along. They clamped down on that. Then that pissed off their benefactor, which was the United States. And now the United States, all those companies are withdrawing their assets and making stuff in Vietnam and India and a whole bunch of other places. And so they're toast. They're in like and not only that, they got a declining population. They got to worry. You got to understand that the geopolitical nature of Asia. You got to worry about like sort of a newly reinvigorated Japan is going to scare a lot of people in Asia big time. You have, you could say what you want about them trying to take over Taiwan, but Taiwan's no pushover. Taiwan is they have a lot. They have a big military,
Mm,
um, and even and I would say from what I've seen and just I would not mess with like South Korea. I think South Korea is they are like an underdog that people don't think are as successful as they are, but they are tenacious as a culture, and they work like their average work week is like 65 hours a week. Like they don't fool around. They work,
mm.
and it's I just think I just think China's just got a lot of issues. Russia's a mess. Why would you have a currency backed by Russia of all places? I mean, it was a mess before the Ukraine. It's not like it's really barely. Russia has failed to develop the institutions you need to have an open economy and an open society. They just have never developed any of those institutions.
Mm.
Um, and we'd have to talk about history for like 1,000 years as to why, but and they still haven't developed them. China like came from a different because China was very mercantile before communism, before you had a dictator. And China's history is kind of marred by the capital being moved to different areas. Different people
Mm.
take over. There's 57 different languages that are spoken in China. There's a lot of different people there. We look at them as one big red machine there, but I'm not so sure I think that's the case. I think you're going to have a lot of social unrest. You're going to have a lot of issues. So why would that be a country you'd want to use their currency?
Okay.
Plus,
What do you think gives it so much steam?
a real.
Because everybody earlier this year, you remember
Well,
that, right?
these nuts were like, they were all over the place. And I'm thinking to myself, you're going to swap, like, yeah, I'm no fan of the current administration, but you're going to swap out Joe Biden for like, for some of these like hack Venezuela. Really? Like,
Mm,
really? Like, no, like they need to go there and then or really see real Venezuela, not the phony Hollywood stuff, the real, like there's YouTube videos where a guy has spent like months in like these really, it's like he calls Caracas like the largest, he calls it the largest hood in the world because it's like one big huge ghetto because there's not even running water or anything there. And I had been there before Chavez. It was a so-so city, but it was Venezuela used to be a first world country. Now it's like a
mm.
fourth world country. Uh, and that's what socialism and all this stuff does to you. It's just it's always the same, and it never works for a reason. And the people who promote it are blind to the fact that it just never works at all. A lot of the elites like it because they all think they're, and I hate to sound like a conspiracy theories, but they all think they're better than you and me, and they should be telling us what to do. I mean, Mike Bloomberg has said it over and over again. We're all too stupid. That's why he's got to make a law to tell us to don't drink soda. Because if he doesn't
Mm.
tell us don't drink big sodas, we're too dumb to know not to do it. And and he's harped on this over and over again, and they all think that. And
Okay.
it was one of the reasons way back why, while I'm not a smoker, I was totally against this idea of banning cigarettes because I knew it would lead to all kinds of crazy stuff. And I remember at the time somebody said, oh, one of these days they're going to try to ban soda, and they all got poo-pooed. They're like, oh, that will never happen. They try to ban soda. So
Mm.
these, like, there's a group of that are involved in politics and in not just in the US but in the world, but and like where you and I, like, we go out every day, maybe we have creative endeavors, we have to worry about our families, we worry about, I have a cat I got to worry about our friends, we try to have a better life. I always say I try to make sure, whatever I'm doing, I may not be perfect, I may be a big mess everything up, but I'm always trying to be better than I was before. So I just
Mm.
keep trying to improve it, even if it's just incremental, like a little bit at a time. I just always keep trying to improve myself and, learn more things, do more things, have more fun, whatever it is, be nicer to my friends or whatever, and all that kind of stuff. But there are people that every night they're just power mad psychos. They like, all they're thinking about is they want to control everything, tell you what to do, tell you how to stand, how to sit, what to eat, what not to eat, and all that stuff. And they embrace it. And
Mm.
I think one of the things that's becoming so readily obvious for a lot of people is people are more and more seeing that this is the case. And they're like, what is going on with this stuff? Like, what is the World Economic Conferences and all this stuff? Like, these people are nuts. Like they sound crazy. Like, we're gonna eat bugs, or cow farts create global warming. I mean, this stuff is just stupid. It's just stupid.
Yeah.
It's
Now, how do
and
you
the
how do you
problem is, if you say it's
Mhm.
stupid, you get banned from Facebook. And it's like, no, it's still stupid. Just because I got banned from Facebook for saying it doesn't make it smart. It's still stupid.
now,
It's like, and I think as an
Mhm.
investor, like, you got to have that discerning eye. You got to be way more skeptical, and you got to really listen to stuff and just say to yourself, like, that just doesn't, like, that doesn't sound right. Something's off there. Like look at this whole thing with Open AI. They replaced the chairman, then they got him back, and like, you're not getting
Mhm.
this story out of that. There's something big was going on that they don't want to say.
Okay.
That whole thing
Now,
was,
I want to you touched on this earlier. You was talking about investments for 2024. You mentioned AI, right? And you
yes,
brought up a good point. You said the biggest threat to Uber was AI, how people can just get on Chat GPT and say, "Hey, give me a ride to New York." Especially in New York. I mean, New York has the fastest Ubers in the world. You better not hit you better not order Uber until you are ready to go.
yep,
You don't, most places you could order Uber, go brush your teeth, take the shower maybe real quick, and then go get it. No, not in New York City. New York City, I learned that by being there. I'm like, wow, he's like, but it makes sense because you got so many cars in such a small area. And But let me ask you this question: 2024, you spoke about AI. What's your investments? What are you looking to be the winner in 2024?
Oh, I would look at like you could play it a lot of different ways. You could play it through, say, semiconductors, some semiconductor companies, right?
Hmm.
Even on the periphery, there's all kinds of new stuff coming out all the time. You could play it indirectly, like through companies like Microsoft, and you could own like there's a stock AI. You could buy that. Plantier Technology is still one of my favorite. That's one the media hates that company because they're not
Yeah.
politically correct. So they're always looking to bash them for some reason, but they're really AI. They're AI and blockchain and management all in one shot.
Mm.
And I mean, I would say AI. You couldn't find a more better use than database management for AI.
Which is the
I mean,
best AI company out
imagine
there?
all
What AI company
the
you like the most?
Well, I have AI, which is I forget what the name is. It's like C3 something or other is the name. AI is the symbol. Plantier is PLTR. That's like that's probably my favorite altogether. And I would for a lot of people who don't want to take, huge risk, I would buy Microsoft. They have a big position in this open AI amongst many other stuff. And you saw from the little kerfuffle the other day that they were willing to hire everybody from the whole company. They were going to hire them all. They were all going to end up working at Microsoft.
Mm.
So that was one of the reasons that they fired the board and all kinds of crazy stuff went on. But um, I would say those are easy. There's other stocks out there. You're going to get a lot more volatility, and you got to be careful because you could just be, I mean, AI is like the things about, I think it's close to 30 now or something like that. But that thing swings from, tomorrow could be 47. On
Mhm.
Tuesday of next week, it could be 17. You got to be real, you got to have a strong heart, you know. Uh, Plantier moves around. It seems to be somehow capping out at 20 all the time. It gets up to 20, and then something always seems to happen. Um, but I think it's going
Why
to, in
so
the
people
long
bid
run,
on PLTR?
Plantier can.
Why everybody so big
Hmm?
on Plantier? I don't know. It had like it's like Uber did 100% this year, over 100%. Plantier did, I don't know, like 200%. Do you think that's really going to go into another year?
Oh yeah, yeah, yeah. We're at the, think of this with AI. Think of this as the 1994 Netscape goes public. The internet gets introduced to everybody. Thanks to Al Gore who discovered it, and we go. It just takes off. There's like stock after stock after stock after stock comes out. Amazon, all kinds of crazy stuff goes on, and Google, like one thing after the next, after the next, after the next, and it just goes nuts. And then the whole thing blows up around 2000. It runs like six years, 7 years. I mean,
Hmm.
we're barely running yet. We're barely got going. We're still in the very early stages of this thing moving. And yeah, it's going to get way overpriced.
Hmm.
It's going to be, and 90% of the companies that were involved at the beginning will be out of business or be eaten by another company by the time you get to the end. And that's what happened with the internet. What about, remember? I don't know if you remember Ask Jeeves. Does anybody
Yep,
remember
Ask
Ask
Jeeves.
Jeeves?
Yep,
Like
that was the Google.
that was AI. Ask Jeeves, right? That was
Mm.
it, right? Uh, so I just think that you're at the very beginning of that, and it's super exciting. I think they're harping on the negative because they're worried that it's going to give the little guy too much power. I think that's what they're worried about,
Too smart. I
and
think I think it's going
I
to
think
be
that's what.
it's going to outsmart us.
Well, it can only be as dumb as the people who create it. Like, I think there's very little evidence in the world today that there's a lot of smart people doing things. There are
Mm.
smart people, but you couldn't tell that by the way the world is being run. So I would say you're pretty safe. So if those people are designing AI, I'm not too worried because they can barely figure out how to fill a pothole. They're not really, and I know there's a lot of, you can see all the misuses of it. I've already had issues with it where it won't do certain things. because
Mhm.
it's politically incorrect to say something, then so it won't say it or stuff like that. Um, but those are hiccups along the way. And then also all this data you feed it every day. You ask it, write this, write this. What about this? It's recording all that stuff. It's
Mm.
building a bigger database.
That's a very
And
good
so
point.
it's so
Do
that's
you
kind of
feel like AI
interesting.
today is like the internet in 1999?
Fun. You're going in and out a little bit.
Oh, so the AI, do you
Try
feel like
again.
it's like the internet? Like that's the position you feel like is in.
Hold on.
Uh-oh, did you lose me? Or did I lose
And
you?
I think the
Do you got
signal
me?
is getting
Okay. Yeah, we're about to wrap it up, but I want to ask you, can you hear me? I don't know if we lost. I got you. I can hear you. I can see you. I can see you, but I can't hear him. Are we losing Uncle James, y'all?
can't see you, can't hear you. It's like
Oh, he
it's
can't hear
all.
me. Let me try. Let me try it again. Let me try it again. Give me 1 second. This
Oh, that
happens.
now I can hear you perfect.
Okay, there you go. All right, there
Yeah,
we
now
go.
you're right back in.
All right.
You're perfect. You fixed it. See that?
See. So, how do you feel about the time? Do you feel like
See,
this
if you grew up
timing?
in the 70s, what you would do is you just unplug it, you count to 10 and plug it back in again, and 9 times out of 10 it would probably work. So you just like that's what all us like 70s babies like we know that. We learn it. You just unplug things, you count to 10 and plug it back in, and most of the time it works again. It works right.
Okay. But Uncle James, I want to say this before we get out of here. Is there anything that you want to say before we get out of here? Anything you want to leave the audience or the people that's catching the playback or that's live?
I would say right now, I know sometimes it looks pretty grim out there and there's a lot of stupid stuff going on and but I think we've turned the corner. I would be more optimistic about things going into the future than I've been in a while. And I would say also I would say that when it comes to new technology like AI, it's always going to accentuate whatever you do. So, for example, if you're lazy, AI is going to make you lazier. But if you're a hustler, AI is going to get you to hustle. You're going to be able to hustle better. So I would don't buy into the negativity. I would be way more optimistic. I think I'm surprised how negative people are. I think there's just a lot of great things going on. They're under the scene. They're under the surface. You just got to look for them.
Mm,
And that would be my word right now. I would say I'd be way more optimistic than we're kind of like the mainstream media particularly is being right now.
okay. Well, Uncle James, I definitely appreciate it. I took some notes here. What you said about interest rates. That hey, you had a very good um, take on that. Hey, interest rates are back to average, and we need interest rates to be able to cut back down in the future. Everybody's thinking like, "Hey guys, inflation is gone now. Let's get back down to 2." Because everybody's like, "Hey, we have 5 point interest rates have gotten up to 5.3, the Fed fund rate at least," and they're like, "All right, guys, stop playing. The inflation is gone. Now we're going to get back down to 2." That's what a lot of people are thinking, right? That's what a lot of people are saying. They're like, "Hey, the Federal Reserve could be cutting interest rates next year. Hey, the Federal Reserve has said interest rates have inflation has topped." So you know what I mean? So people are looking at like, hey, is this the end of the interest rate? Are we going to start, cutting? So everybody, so I know you're saying
And
the long-term rate is 4.6, but everybody's thinking, is it really the new one is going to be 2? And we're trying to get back down to 2.
it's a fantasy that you need to get over. Like it's just not going to happen. It's over.
Now, you made a good point about oil. Oil. I always see oil spike, go back down, oil spike, and things like that. But how you said about oil, speaking about hey, it's below $70 a barrel now. BPT is going down. Energy sector, I think it'll spike again. I don't know when, because that's how I've always seen oil kind of go and spike, then it'll go solid down and spike, stuff like that. So, great points on the oil, on the interest rates, and very great point on Bitcoin. I should have kept it. Should have kept it up. But the Bitcoin, speaking about how Bitcoin hasn't done anything, cryptocurrencies haven't done anything to show their value, is mostly the hype is the volume. More people have access, accessibility. I was talking to a buddy the other day, and I told him, I said, hey, one thing that will help me, let's say I'm writing books and things like that, one thing is accessibility. Now, they probably won't get online and buy a bottle of ketchup from me, but if they walked into their local convenience store and saw my brand, they'll probably buy it, right? So accessibility. So you're saying, hey, when the accessibility is going to make it more volume, and the volume is going to drive the price, but doesn't mean necessarily it's going up because of its value. So that was a very great,
Right.
uh, point that you
It's
made there.
it's it's inside baseball thing for institutional investors.
Mm, okay. Now, and you saw how AI has shown us something. So yes. So all right. Well, definitely great having you on talking about 2024, the different investments. I'm putting mine out there. I'm looking at consumer discretionaries to not run rampant, but I think it's going to lead in 2024. It's going to have a nice jump. I think it's going to outperform the market. So consumer discretionaries for me. I don't want to get into the whole thing, but I just want to kind of put my tab bid there. Is there anything else? We talked about debt servicing, debt. You brought up a good point saying, hey, these people, when interest rates was at zero, people was paying 30% on their credit card. So, but but yeah, that's all I have, you know. That's all I have
That's a
for
lot.
tonight. Anything else you want to add?
No, you covered it all. You covered it all. That's good. And maybe just say if you have that credit card at 30% interest, you need to get rid of it and pay it off. That's
Okay.
it.
All right. Well, y'all heard it here.
That's a guaranteed return right there.
And the thing is, the credit card will come right back. 3 years, usually it'll be right back. In most people's cases, because the behavior hasn't changed.
Been drumming. That's what
Yep.
I did. I almost had a nervous breakdown, but it worked. It's like stop drinking and smoking or whatever. You just got to cold turkey and cut them up and throw them out.
Okay.
That's it. And you got to clean living.
You got to do what now?
Clean living.
Clean linen. What does that mean?
In other words, if I want something, I pay for it. And that's it. And you don't use credit. When that thing costs $500, you think twice. When you use a credit card, you're like, it's $500. It's like another $2 of payment every month. I'm not going to miss it. But when you pay cash, it's a whole, or use a debit card or whatever, you think about it totally different, and you become a much better consumer.
Well,
and you can make a lot less money because you have no bills.
That's true. Okay. Well, Uncle James, that's going to be it for tonight. That's going to be it for 2023. Wonderful. We're going to see you next 2024 somewhere. Talk some more, probably around the first, second quarter, whatever, and we're going to go from there.
Yep.
All right, ladies and gentlemen, until the next video podcast, cartoon, or whatever it is crazy you see me doing around the globe. Y'all already know my name is Prince Dykes. I'm the Prince of Investing, and we're here live with Uncle James. He's here too, live with us. Until the next video podcast, cartoon. Peace. Be safe. I'm out, and thank you.